Scott joins me as usual. Roger, how are you today?
I'm great. Thank you for having me on, James. I really do appreciate your time.
It's a real pleasure to have you, Roger. And let's start with a sort of a high-level view of the markets. They've rallied quite significantly during the past week. They've been up, they've been down, they've been sideways. Presidential election approaching. The market seems to be indifferent to it. Let's talk about that in the context of our theses of our last few conversations. Your recommendations and features have been very spot on. I find that they've been very accurate in terms of protecting wealth as well as exploiting some of the opportunities out here. What's the status of all this right now?
Well, right now, I think we are seeing very similar trading action to exactly what we saw 4 years ago. Basically, the timeline, the typical August, the end of August trading session where there's nothing going on, where where there's not a lot of participant, there's not a lot of trending markets, volume, interest is lower. It was very high 4 years ago. Basically, the summer months 4 years ago passed by in terms of trading as if it was not the summer. We saw the same thing here. And very similarly, 4 years ago, right at this time, let's say second week of September, okay? The market just started, volume was lower, interest was lower, participation was lower. There was very little trading range. There was a lot less interest from people about the markets. People were really focused on the election, and we are seeing exactly that right now. It's like somebody took the summer and just pushed it ahead, and the market's behaving very similarly to how it would behave on a second or third week of August instead of October. And I was expecting this. We were prepared for this. I was telling anybody who would listen to me and those who wouldn't, that you really need to this is a time to be defensive. This is not a time to be Superman. This is not a time to pick the hottest stocks. This is a time to cool off, lower your exposure, ETFs or cash, or about 15, 20% equity till we get through this cycle. Why? It's a very polar opposite election cycle. Up till a few days ago, the markets were trading below the 200-day moving average. But I'm going to tell you something very, very interesting. And I'm going to say, I'm surprised that I'm not seeing others talking about this, because this is a really big red flag for President Trump. And again, this is something I've been saying for months. When President Trump started this trade war with China, okay, the Russell 2000, those are stocks that have a capitalization of between, say, $50 million and $2 billion. Mid-cap stocks, not tiny stocks and not big stocks. But obviously, the smaller the company, the more vulnerable it is to the trade war than a S&P 500 conglomerate that's diversified, making money hand over fist, paying dividends, so forth and so forth and so forth. As soon as President Trump announced this trade war, the Russell 2000 started trading at a discount. In other words, the Russell 2000 made a high beginning January of this year. S&P made a high September 2nd of this year, 9 months apart. Now, typically, if you look at the Russell, if you overlay the Russell to the S&P 500, you will see a 97% correlation over the last 20 years. So they huff, they puff, but they move the same way. Same thing for the Dow, same thing for the NASDAQ, same thing for the S&P. And they all move together. They all move together. And they have a very, very tight correlation over time. And I don't mean day to day, but over a month or two, you look at them and they start to move. Hasn't happened all year in the Russell till two things happened: the debate and Trump got COVID. Ever since that happened, and maybe a few days before that, the Russell began grossly outperforming every single day. Now, the Russell is trade war. The trade war is like a wet blanket to the Russell. Investors, savvy traders know that if Biden wins, the first thing Biden's going to do is he's going to say, trade war? What trade war? There's not going to be a trade war. That Russell right now is still about 15% undervalued in comparison to the S&P 500 and the NASDAQ 100, okay? Mm-hmm. Every day, including today, its relative strength is outperforming the S&P 500. The market is telling us right now that Biden is winning this election. Now, is the market the best indicator? I don't know. Maybe the polls are better, but as far as the markets right now, if you look at renewable energy stocks, they've been really, really strong during that same period of time. So right now, according to the market, the way I see it, the Biden is taking the lead. And I'm a Republican. I'm just, don't shoot the messenger. I'm not trying to get into a political discussion.
Sure.
I'm only telling you what is obvious and what I'm seeing and what's in front of my nose.
Sure. What is it about the Russell 2000 stocks that makes them so susceptible to trade war issues?
One-trick ponies. Think about it. Think very logical. You have a bunch of tech stocks, a bunch of biotech stocks. These companies are just getting started. When there's a taxing issue that comes up, when there's a regulatory issue that comes up, when there's a diversification issue that comes up, the smaller stock is always going to be hurt more than the large cap stock. The example that I would give to everyone when they would ask me the exact same question over the course of this year, when the Russell was underperforming, was look at Johnson & Johnson. Say Johnson & Johnson, something that they make in China doesn't pan out. Okay, they've got 1,000 products. They're not dependent on China. But you take a company that does one service or one product, the odds are they're going to make something in China. Okay, let me give you a very good example. There was because you featured a lot of marijuana stocks. Okay, I'll give you a great example of this. There's marijuana is smoked through many different. It's you can eat marijuana, you could smoke marijuana, you can vaporize marijuana. Okay, there's a brand of vaporizers that the company is a Russell 2000 stock. I don't recall the name of the company, but they were making half of their parts in China. Okay, if China's out of production, they cannot complete. In other words, they're out of business if China can't do what they're doing right now.
I see.
That's just a real simple example, and there's countless others. But the bottom line is, you have a lot more one-trick ponies. You don't have conglomerates. You don't have the diversification that you have in the S&P 500. You don't have the cash.
Right.
It's kind of like you take two groups of people. You take a group of, you take the poor class and you take the middle class, and you cause a financial restriction. Who's it going to impact more? The poor. It'll impact them first too. But I mean, if you look at Trump, and if you look at the day he announced the trade war, this is not a debatable. The Russell, the small caps have been impacted substantially. It was like a wet blanket. I mean, they just fell and didn't come back. But the S&P came back and kept roaring, but the Russell did not. And I've been watching this. This has been over for a year now. But finally now, for the second week, look at the S&P 500 and we've had 2 days of clearance above the 50-day moving average. We've had 6 days of clearance on the Russell now. We've had a Russell making 7-month high. The S&P can't even get up to its level that it made on September 2nd.
Right.
So these are real, and it's not like, well, this happens 55% of the time. No, it's happened every single day. The Russell has underperformed for 9-10 months, and finally, for the last week and a half, it's been just completely outperforming. Coincidence? I don't know, but I know that the first thing that Biden would be trade war with China. He would say, we need a trade war right now. He would get rid of that trade war.
Sure. So if we were to interpret the numbers now in the polls, certainly President Trump is struggling a bit thanks to his coronavirus diagnosis. And there's increasing speculation that the Democrats could win the House and the Senate, as well as the presidency. And that would really, really change things for the economy and the stock market, I would think, with the Democrats basically in a position to unilaterally push through whatever needs pushing through. Do you think that would result in a substantial stimulus boost to the market again? that
Yes,
it would.
you actually just took the words out of my mouth. I was getting ready to talk about it, and you just said it. Yes, so I actually think it would be it would be maybe not in the long term, but I think it would be very bullish for the stock market. I think what would happen. Here's what I think would happen. I think initially we would have a little shock wave in the market. It would last maybe 2-3 weeks. And then we would see a very bullish market because of exactly what you're talking about right now. So yes, I do believe that, and you and I are not the only ones. This is a very logical conclusion that many financial analysts have been talking about the last few days. So
Sure.
yeah, I am seeing that, and again, don't shoot the messenger. You know, this is not a political discussion with you and I want to make sure people at home know that we're not trying to sway anybody or change people's opinions. This is just how the market is reacting and how we're seeing the market, because people are getting very vested right now in their positions. So folks, please, we're just trying to help you make money. We're just telling what, reactory what's happening.
Yeah.
So yeah, I'm seeing that. And yeah, I think it would be bullish for the market. And the market tends to rise the most when you have the branches of the governments aligned. I did some studies, and actually I was very surprised to find out that the market over the last 50 years behaves slightly better when the Democrats control the White House. So I was really surprised to see that. But the real shock was when you see the alignment between the House and the president. That's when the market because there's not a lot of things moving in its way. There's not a lot of friction. So the market really tends to move. So
Sure.
the way I'm looking at it, I'm seeing the market giving us more upside regardless of who wins. I think it's going to be a little trickier with Trump, because Trump tends to be a really heavy negotiator. But ultimately, I think the market would go up. I think different sectors would begin leading, but ultimately, here's what I think. I think the COVID-19 is going to dictate the type of stocks and the type of sectors that are going to run a lot more than who is leading the election. But with that said, because look, the bottom line is, you give us Trump, you give us Biden. If we have another break and we have to close things down, it's going to put a damper on the economy. There's only so much the president can do, as we have seen. He can't just keep doing this and getting, pressing a button and causing inflow of capital. It's a nice idea, but eventually, it's going to, and we're going to get the vaccine coming out. Things are going to happen. With time, this will work out. But again, I think the COVID-19 for the foreseeable future. I was just reading a report that Bank of America wrote. They say that this COVID-19, and this Bank of America has very good analysts. They don't really have favorites as much as Goldman, in my opinion. And they said that this what happened in the last 6 months has caused the online commerce wave to go forward, kind of like moving everything fast forward 5 years. We're talking $2 trillion infusion into the economy that's going to benefit Google, Amazon, Walmart via online. It's kind of like we moved from 2020 to 2025 in terms of how we're dealing with technology and how we're relying on technology. The last 5 purchases, James, clothing that I have made have been online. I have never bought I've never ever bought clothes online. And now I've completely converted to buying clothes online.
As have I. That's really interesting.
You see that? And then, and I'm not really interested now that I've kind of figured out what I'm doing. And, it's kind of like learning to use the computer for the first time, because you've never bought anything online. Now I know my sizes. Now I've bookmarked now it's like, oh, I'm not going to go to the mall. I don't care if they open. I'm just going to go online. I know everything I know. I got it all figured out here. I press a button. It comes to my house tomorrow. I love it.
The crew here jokes that this place is the Amazon depot, because Amazon stops here almost every other day.
I got 2, 3, 4 Amazon packages a day coming to my house. So I know how it is. But the point is, the world is changing, and I don't think this election is going to have as big of an impact because of what the world has gone through, and because a certain things have started taking shape, and that movement is not going to that road that we have started going on is not going anywhere.
Yeah.
And there's only so much the president can do, and there's only so much Biden can do, and ultimately I'm a Republican, but I'm only reporting. My job is to tell you what the market is seeing and how the market's reacting. A lot of the renewable energy stocks have been holding up unusually well. And again, the Russell 2000 has given us the best indication of who is leading, and right now, it's roaring.
Yeah. Yeah.
Roaring.
So I guess if Biden wins, then it also sort of speaks well towards commodities, because obviously he's going to remove a lot of the barriers to China's exports, which is going to increase demand for the raw materials, which is going to have a all tides rise, a tide lifting all boats effect on everything. So then,
big tech. I think. Well, and I'm that's funny enough that we backed into that, but big tech is overbought. It isn't making new highs right now. We're only seeing a chosen few of the stay at home, the Nvidia, the AMD, the best of the best rising. But what we saw 3 months ago with just broad tech climbing and NASDAQ making new highs, internally it's not happening. Relative strength is telling us otherwise. There's definitely a much broader exposure right now in the market to not to tech. We're seeing freight shippers, paper stocks, industrial stock, consumer staples, and utilities, materials, industrial, home builders, freight shippers, and in my opinion, paper is going to be hot. Paper is next on the horizon because
really,
packaging,
right,
packaging.
interesting.
No
Okay.
matter, and this is an example. Here's a perfect example, James, of what I mean by how COVID setting the stage for something, regardless of which way the election goes. Let's say that we have a stay-at-home environment and we don't have a vaccine. Okay, stay-at-home stocks are going to do another bull run, and freight shippers are going to do a bull run. How do we get everything in the mail? Paper. Who makes packaging companies? Paper, and more paper. Right? Very simple. Now let's look at the other side of the argument. Let's say we have a vaccine first quarter. Okay, let's say we have a vaccine. How do you think that vaccine is going to get everywhere?
Right.
You're not going to have a little milk bottle delivery guy giving. It's going to containers, shipping. Shipping is going to stay hot, whether you go this way or whether you go this way. See, no matter which way you go. So, and this is what I'm saying, that do you realize how much how many of these vaccines are going to be shipped? I mean, it's going to be madhouse.
Yeah.
All over the world. So either way you look, stay at home, okay, shippers, vaccine, shippers. No matter how you look at it, the world, this COVID-19 thing is shaping the world a lot more. And the money that's coming into the market from central banks and the Fed and another package, that is what's shaping the markets a lot more than who's going to win the election, in my opinion.
Sure. So where does this leave all of the savers, the pension people who rely on pension funds? Fixed income products have really been sort of decimated with the volatility of the last year, and also obviously the low interest rate is having that effect. Do you think that Biden's victory, assuming that is the outcome, would have a hawkish or a dovish effect on interest rates?
Well, we already know that rates are not going up anywhere fast for at least 2 years. The Fed made that pledge and promise. And even if we go up to 2% growth, which is very dubious in my opinion. I mean, I'd love to see that, but with the unemployment numbers, I don't think we're going to see anywhere near, or the GDP down 30%. That's a pie in the sky. So here's what I'm going to tell you. I think, and again, folks at home, I'm not taking sides. I'm not trying to be political, but hear me out here. I think in the event that Biden wins, Biden is no Bernie Sanders. this is a guy that's been hot and heavy in the business world for the last 25, 30 years. So I don't think he's going to undermine anything. But honestly, again, this takes me to COVID. I think based on where the world is right now, and based on the GDP, and based on the growth rates and the deficit rates and everything else we're seeing, I don't think Biden's going to have a choice. I don't think Biden's going to do anything. I think he's going to be. I think that we are set in a very specific pattern, and that pattern is going to play out, and the presidents are going to have minimal impact. I think their best bet would be to stay out of the way of what's happening right now. And I
Sure.
don't think Biden, and I don't see Biden making a lot of waves. If anything, I see him maybe legalizing pot. Getting rid of the China trade war. I don't see Biden being extremely destructive from what I'm hearing. Maybe I'm completely wrong. I don't see him being like Bernie was taking the House. I would be very scared. I would be considering leaving the country if he was taking the country in the shape that it's in right now. But I'm not seeing Biden being too destructive. I'm seeing him being more of a neutral guy.
Sure.
And
He's more conservative than social for sure.
right, exactly. So I don't really see it, especially if the House and him are aligned.
Yeah.
Again, I see a little tidal wave, a little restructuring, a little inflow first quarter, and then I'm seeing a pretty good market because of all these things that have been the stage has been set.
Sure. So regardless of who wins, I think we're aligned on the idea that stimulus is imminent given the
Yes.
weakness in the economy. And
Yes.
does that sort of portend another leg up in the precious metals segment?
I believe so. I'm a little concerned because they have been lagging behind the market over the past week. But you got to also take into account that this election will impact global economy. So the fact that precious metals and everything, it just seems like I don't want to make the mistake of confusing non-interest with bearishness. And I think what we need to do is we need to take a fresh look at metals, James, from both a fundamental, mostly technical perspective, because fundamentals really haven't changed for them. As we get closer to the election, or maybe immediately after the election, I don't think we're going to get a fair answer. And I'm being conservative, but I'm being as honest as possible with you. I think we're in a wait and see mode right now. And I think if we try to go too far ahead, we're going to we're going to create more problems for ourselves than more questions than answers.
All right. Roger, that's a fantastic update as usual. I thank you for your time today, and I look forward to speaking to you next week.